As expected, in its July meeting, the Federal Reserve raised its benchmark rate by another oversized 75 basis points to 2.25% to 2.5% to fight U.S. inflation at over 4-decade highs. The Fed has spiked rates 4 times in the last 5 months. It shows how quickly inflation spiraled out of control in the United States and calls into question the Fed's ability to monitor the world's largest economy. Why is it so behind the curve in tackling inflation that it's now scrambling to do so? Throughout the year, we have seen U.S. inflation consistently surprising to the upside and forcing the Fed to act more aggressively. In doing so, it has also affected the financial stability of developing economies, with many forced to tighten their own monetary policy and sacrifice recovery or risk financial instability from capital outflows and weak currencies. But besides U.S. monetary policy impacting global financial stability, Washington has committed over $50 billion to send arms and economic aid to Ukraine. One has to ask, will this only prolong the conflict in Ukraine? Those who lose out the most on U.S. weapons shipments are the Ukrainian people. The Russia-Ukraine conflict has been a major contributor to global inflation, with disruption in energy and food supplies. Instead of sending billions of dollars in arms to extend the conflict and stretching out global economic uncertainty, how about investing more time to reach a peace agreement? The Federal Reserve's rate hike overdrive and Washington's weapon shipments to Ukraine are just the latest moves that cast a long, looming shadow on the global economy. In 2018, the United States launched its trade war against China. When the world's largest economy chooses to constrain the world's second largest economy in an interconnected world, the rest of the world suffers through increased frictions in doing business and long-term uncertainty about the future. Previously, America offered a sense of stability for the global economy. Now, it seems like that role is increasingly shifting to China. China's openness policies have not wavered despite the rise in protectionism we see around the world. China's targeted policy measures have kept inflation in check despite rampant inflation worldwide. And the country's market development potential still offers tremendous win-win opportunities for businesses worldwide. With the Fed hiking interest rates by 225 basis points in 5 months, the world will be closely watching if the U.S. will fall into recession. If it does, it will be yet another setback for a global economy simply wishing to have some clarity for the future.